Hey traders, welcome to the channel, The Novel Trading. I'm your trader and trainer, Mr. Goel over here. So in today's video, we are going to do 4 tasks over here. First, we are going to understand that there was a very important forex news in the market. And then we are going to understand what trades we have taken in the New York session over here. So we have taken 5 trades over here, as you can see over the screen, and how are the results and what were the technical analysis of it. So in the second step, we are going to do the trade analysis of all the 5 trades. Then third, we are going to do trade psychology analysis of the same. That means we are going to understand what emotions did we have to go through while trading in this market. And last but not the least, there is also a giveaway in which you will be getting a share in my profits. So watch the video till the end so that you can know the rules of the giveaway challenge. Let's start the video and understand what happened in today's market. So let's start with the forex news in the market. So for the purpose of the forex news, we are going to use the website of the Forex Factory calendar. This is free of cost, guys, and you can use the same to know the exact timing and the date when the news is going to be released in the market. So in today's market, exactly, if you can see the Thursday, the 715 USD flash manufacturing PMI was released in the market. I started the trading at 7 p.m. when the New York session started, and exactly at 7:15, my 2 trades were in between. So I was caught in the news, and you will understand that there were more emotions involved today in the live trading itself. Flash manufacturing PMI is a simple economic indicator which, if is increasing, you will see a good momentum in the DXY as well as the gold itself. As you can see that the focus data was 49.9 and 51.0, but the real data, the actual data when released was 52.3, because of which, if you will understand, fundamentally the DXY or the dollar index went upside and the gold went downside. And while we have taken the trades at the 7 p.m. based on the market structure, we have taken the sell trades over here. So let's go on to the screen and understand the technical analysis. First 2 trades were over here exactly at 7 p.m. As we can see, previously the market was in a lower low and lower high momentum, because of which we were able to connect that the market is in downtrend, and I was actually looking for the downside trades only. So first trade was based on the engulfing candle basis. As soon as the price created a good support in the market, and you can see that the price created a bearish engulfing candle, so we punched the first trade exactly on the basis of the resistance. Now zooming in, you will see that what did happen as soon as the price gave us a breakout structure towards the downside, the price went up again, and here our entry got mitigated. Since we only play with limit orders, the entry needs to be mitigated. I don't play with the market orders or based on the breakout. We are mitigation based traders. That means our strategy is based on the mitigation of the previous order blocks or order flows. So as we can see that this major bullish candle was responsible for breaking the structure, I placed my trade over here. As soon as the market gave us the entry, the market did try to touch the stop loss. So if I will zoom in for you, you will see that the market was very near to the stop loss over here. Okay, but it didn't touch. That means the price still was able to safeguard my stop loss. And from here, if you will see, price went towards the downside in a short momentum. So as soon as the price started again towards the downside momentum, so the second trade was based on the same process. As soon as we can see that the price gave us another breakout structure towards the downside, we placed the trade on the previous order block, which was responsible for the breakout structure. And the price, after giving the breakout structure, mitigated the previous candle, giving us another entry. So these were the 2 entries that were running together before the 7:15 p.m. news. So as you can see, exactly at 7:15, the news was going to be there. So there was a kind of hesitation whether I should be in the trade or should I close the trade, because as you already know from past videos as well, whenever there is a news, there is a huge volatility in the market, and whenever there is a huge volatility, the price doesn't care about the stop losses. Sometimes it doesn't allow the stop loss to be there. So if the price would have gone towards the upside and not in my favor, the price would have not hit my stop loss over here. Rather, it would have been a huge volatility where I would have received a lot of slippage in the market. But since the trade went in my favor, went according to the structure over here, we can see that both these trades had in the single candle, we were able to get 1:3 risk reward in both the trades in the single candle. So if you will see, this was a 1:3 risk reward. This is another 1:3 risk reward. So by these 2 trades, we were able to establish 6% return in the market. And afterwards, what did happen? If you will look over here, the price was going downside again and again and was not giving us an entry. I placed my trade over here. The next trade was placed over at this candle after the breakout structure, but the price took a very small pullback. After the breakout, the price took a very small pullback and didn't come back and mitigated my level. And that's why I was not able to enter at this level as well. Now going forward, there was another news exactly at 7:30 p.m. So if you will look over here, there was another news exactly at 7:30, because there were 2 news to be released in the market today. Now the price another time made a good support over here. Price tried to consolidate and give us good halt, through which we were able to take another trade. But as you can see, again, the price after the breaking of structure never come back and mitigated at this level. So this was another missed opportunity. But according to my setup, this was not a dollar trade. And sometimes when the volatility is huge, according to the trading psychology, if you will understand, these are the moments when the FOMO comes in. When the fear of missing out comes in, kicks in the brain, and the adrenaline rush in your brain urges you to take the trade. which you have to avoid and which you have to stop in the market. So afterwards, what did happen? Another time after giving us a break of structure, the price went towards the downside. Another way we have taken the same entry based on the engulfing candle. It was a good stop loss in the market as the market went towards the upside and not in my direction. And after creating this major stop loss over here, after creating a new higher high, I was expecting that the market will try to return back to the main original point, or at least will come back to the main order flow or the order block from where the major structure started. Another time we took a trade towards the downside, and as you can see, the trade did play out, but it didn't go 1:3. As all of my trades are minimum risk reward of 1:3, it did went towards the downside according to my plan, but it didn't give my target. And what did happen from here? The market started moving towards the upside again. From where, as you can see over here, what did happen? The price was gaining a momentum towards the upside. So after creating a huge series of lower highs and lower lows, price gave a V-shaped recovery towards the upside again and creating a series of higher highs and higher lows from here. So from here, what did happen? Again, once more, we have tried to take a trade towards the downside from where we expected that this was a good liquidity levels where the market can come and breach these liquidity levels. So another time we were able to take a trade towards the downside, which was another stop loss. So the format of our trading is very simple and very format. That means in every session, in Asian and in New York session, we take 5 trades every time. 5 trades every time we try to take with the scalping method with a 1-minute time frame, as you can see. And also guys, this is a zero spread account, because of which, if you will understand, in the first trade, the price was very much near to my stop loss area, but it didn't hit my stop loss. Rather, what had happened, the price tried to test my stop loss area over here, but it didn't give me my stop loss because there was no spread over here. So this is a zero spread account, which you can also open. I have shared the link in the description itself. So you can open the account for free of cost, and you can also enjoy the zero spread account, because of which the calculations are very perfect and very near. Okay, so these were the 2 winning trades and another 3 were the losing trades in the market. So let's zoom out and let's understand. So these are the major 5 trades that we have taken over here. And after this major huge down momentum, the price actually went in a V-shaped recovery, which was very rare. And this doesn't happen so often. If you will look over here, the price moves in swings, and the swing structure says that after creating a series of lower lows, the price was ought to create a series of higher highs, and after which the price was about to go towards the downside before going towards the upside. But today we can say that this was a V-shaped recovery over here, out of which this is a very rare case, and because of which we have taken the last 3 trades were not at all profitable. In an average, if you will look over here, plus 3% over here, plus 3% over here, -1, -1, and -1, we are at a total of 3% in the market. Okay, so today we gained a 3% momentum over here. So our capital increased by 3%. And this is how the format includes. If you will look over here, every 5 trades has a distributed probability, because of which we are able to enjoy a positive probability of winning. I'm going to make you understand this concept in the next video in detail. Rather than taking a huge stop loss in a single trade, we distribute the stop loss into 5 major trades. So forth, we also getting the probability of winning. So we are increasing the odds in our favor. Rather than decreasing the odds by taking a huge stop loss in a single trade, we try to basically normalize the distribution pattern of the probability, and then we try to enhance, or you can say increase, the odds in our favor. Okay guys, so this was the major 3 targets over here. First, we understood the forex news, which we understood that there was major news in the USG at 7:15. Then we have understood the trade analysis, why we have taken these major 5 trades over here. And then there was a psychological analysis as well, that what emotions did we trigger. In this trade, the price was very near to the stop loss. In this trade, because we were near to the news area, there was a huge volatility that was supposed to come, and the patience level was not in our side. And in this over here, my mind was saying to, or you can say it was urging to take another trade, because there was an upcoming volatility at 7:30 p.m. and it was a kind of a FOMO that I had to bury in. Okay, so these are the emotions that any trader has to go through in any given day, or it is a regular process for any trader. So this is basically how you have to think in the markets. This is how you have to go through the whole process to understand and to gain some profits. See, understand this guys, that trading is not overnight game. You cannot become a millionaire. You cannot double or triple your capital in an overnight. You have to go through the process. You have to distribute the probabilities in your favor, and then go accordingly to the process. And day by day, you are going to increase your probability, or you are going to increase your capital by some percentage. So like this, in single session, we have taken a 3% leap towards our capital, or 3% increase in our capital. Okay. And in every session, the distributed probability is like this. This is what we are going to do in the future cases as well. And do subscribe to the channel so that you can get accustomed to this kind of trading, the objective kind of trading that you're looking for to become a profitable trader in the long term. I hope that this kind of scenario has given some meaning to your trading, guys. Now comes the giveaway challenge of 500. So the rules are very simple. Today's question for your learning and earning potential is this: what is slippage? Okay. And how can you protect ourselves from the same? So as I told you in the video, I've told you about one trade where I have received a slippage. So now you have to tell me what is slippage in the market. How can we protect? What is the best way to protect ourselves from the slippage? Okay. So what you need to do is you have to comment your best answer in the video and try to make it as best as possible according to your experience. What is the best way? So after commenting your answer, you have to like and subscribe and share your answer with a screenshot on our WhatsApp chat. I have put up the WhatsApp link on our description. You can WhatsApp your answer with a screenshot, and the best answer will get the giveaway prize, and all the questions will be answered by me on Sunday. You can put your entries or you can put your comment by Saturday 9 p.m. because on Saturday 9 p.m. I will assess all the answers. I will decide the winner. And also, guys, this is an ongoing challenge. So every video will come with a giveaway challenge. Okay. So more consistency increases your chances of winning. And on Saturday, I will assess and I will decide the prize winner. And on Sunday, we will give the answer to the question as well. And also, you will get to know who's the winner of the giveaway challenge. In the next video, we are going to do the same. We are going to analyze the trades. We are going to analyze it psychologically and fundamentally as well. And you will get another question in the market. So we are going to do the same process in the next video as well. We are going to understand the news concept, the fundamental analysis. We are going to understand the technical analysis of the trading, and the major part is trading psychological analysis of all the trades that we are going to. You will also get a giveaway challenge in every video from now onwards. Until Saturday, you have the time to participate in all the challenges. The best answers will get the prize. So I hope you like the video, guys. And if you have any questions, you can also, along with the comments, you can also put your queries over here. Until then, sayonara. See you in the tomorrow's video where we are going to discuss with more upcoming trades. Till then, hasta la vista.